if you're trying to figure out which retirement plan has the best rate of return, that totally makes sense because you want your money to work as hard as possible, right? You want the best rate of return. So you're trying to figure out which retirement plan is the absolute best. So which one has the highest rate of return? Well, if you're just starting out in investing, trying to figure this out, trying to figure out which retirement plan is right for you, this video is for you. So in this video, we're going to talk about the different types of retirement plans, which one has the best rate of return, and what you should look for so you can make sure that you're starting your retirement planning on the right foot so you can get your money working as hard as possible. What's going on, guys? Welcome back to the channel, or if this is your first time at our channel, welcome to the channel. My name is Travis Sickle. So today is a question or Q&A that I'm going to answer for which retirement plan is the best, and also looking at your taxes while you're choosing these plans. So here is the question that I got today. So it says from Steven C. Hey man, I like this video. I'm just really starting to attempt to educate myself on this type of stuff. I have a couple of questions if I'm lucky enough for you to see this comment and for you to respond, LOL. So with everything that you said in this video, brass tacks, with the solo 401k, can I contribute, say, $20,000 per year? Also, what is the interest ROI, return on investment? Where is it, or what is the interest based on? The S&P 500, some other fund? And finally, what is the tax rate on savings of a solo 401k? Steven, this is a great question, and a question that I get quite a bit, and I'm surprised that I actually haven't done a video on which retirement plan has the highest rate of return and how you should kind of go about figuring this stuff out. Well, let's start at the basics. Let's talk about the types of plans that are available to you. So there's basically three categories I'm going to break it down to. The first one is a non-retirement account. Now, this is your checking and your savings account. But if you want to have investments, you need what's called a brokerage account, also called a non-retirement account or a non-qualified account. Now, these types of accounts you put money into, you can basically buy any security that you want, but those transactions, if you're buying and then later selling, if you have a gain, that could be taxable as either long-term or short-term capital gains. So basically, like every transaction could trigger a taxable event. The other two types of accounts you probably have heard of are your 401k, which is your pre-tax type of accounts, or pre-tax type of accounts, which is like a 401k, 403b, 457, SEP, Simples. Those types of accounts have the pre-tax part to them. So that means before you're taxed, before you hit that federal withholdings on your paycheck, it goes directly into these accounts. That is pre-tax. They grow tax deferred, meaning that all those buys and sells throughout the course of the year, there is no taxation on them. The only time they're taxed is when the money comes out, and usually that's in retirement, and that comes out as ordinary income, which is the same as your paycheck. So you're going to be paying taxes just like you would when you get your paycheck at the end of the year, or your taxes when you pay them at the end of the year, or withholdings, right? So the other type of account, the third type of account, so we have the non-retirement account, like your checking or savings account. We have the pre-tax accounts that are like your 401k, 403b, 457 types of accounts. And then we have the post-tax, which is like your Roth IRA or your Roth 401k, 403b. It is the after-tax part of the retirement plans. So that means after you get your paycheck, it is taxed. That money is already taxed. That tax is already withheld from your paycheck. It could hit your bank account where you put it into the Roth IRA, or if you have a Roth 401k, it will go directly into it, but you're still taxed on these dollars at the federal level before they go in. But the benefit is all the money inside of these types of accounts can then get invested, and that investment then grows tax deferred and comes out tax-free in retirement. Now, with all these types of accounts, there's a lot of different nuances. So not every time you take money out of these accounts will it be taxed or not taxed, because timing is important, whether you're taking out today or in retirement. But generally speaking, that's what we want to focus on. Generally speaking, with the Roth types of accounts, it goes in after tax. It stays in the account. You can do as many buys and sells as you want. And then when the money comes out, it comes out tax-free. So the Roth side, the post-tax side, comes out tax-free. So all those gains are not taxed. That's a huge benefit, especially if you're in a higher tax bracket later on down the road. Now, there is a fourth type of account that I'm not really going to get into, but I just want to say it is a non-qualified annuity. It's taxed very differently than how these accounts are, but I'm not going to even talk about that. Let's just keep this very simple, where we're talking about the pre-tax, your traditional 401k, your traditional IRA, and your post-tax, your Roth 401k and your Roth IRAs, okay? So those are the two types of accounts that you want to look at. Now, I've only talked about the types of accounts and kind of how they're taxed. When you're looking at the investment performance in these accounts, that actually depends. What does that depend on? The investments inside of that account. So you could have a 401k, and I think this is where most of the confusion comes in, that you look at a 401k that has a set amount of investments, like the S&P 500 or indexes that track the S&P 500, the Russell 2000, and variations all over the place, what they're focused on, whether they're focusing on a particular industry or a particular sector or a particular country. There's just investments for everything. And then there's the individual investments like stocks and bonds. So you can have any investment inside of these accounts, but some platforms, and that's what I'm going to really leave it at, platforms or some types of accounts limit you on the investments, but not by definition. So what that means is that one 401k could have a completely different set of investments than another one. So if your friend or coworker or family member is looking over your shoulder, looking at your plan and saying, hey, this is a good 401k, or 401ks are good, they might be talking about their particular performance or the investments that they chose inside of their 401k. It doesn't mean that all 401ks are good or all 401ks are bad. So it's the investments that are inside of those types of accounts. Now, some places that you can open up, say a traditional IRA or a Roth IRA, could limit you on the types of investments, and some of them will say you can invest in whatever you want. Now, that doesn't mean that having a long list is a good thing or a bad thing. It matters which investments you're choosing inside of those retirement plans. That is the performance side of it. So it really depends on the actual investments inside of the account, and you can actually have the same investment in a Roth IRA as you could in a 401k, as you could in your non-retirement account, your brokerage account. It really depends on which type of account you have that in, and that will affect your taxes, not the actual investment. So it's not to say that you should invest in a Roth IRA because it has a quote unquote great rate of return. That matters with the investments that are inside of it. So hopefully that adds a little bit of clarity to choosing the types of accounts. So in choosing the types of accounts, you want to look at your taxation, how you're taxed today, where you think it will be on down the road. That is what you want to look at when you're choosing the types of accounts. Now, when you get into the types of accounts, then you can pick the actual investments, and that will affect the rate of return. Now, when it comes to taxes, you're probably thinking, okay, well, you're talking about all this stuff. How do I figure out, should I put more money in my traditional 401k versus my Roth 401k? That is going to come down to your taxes. As a general rule, you want to smooth your taxes out. Now, that's not always possible because your hindsight is always going to be 20/20. We can always figure out later on down the road where taxes are going to be, or think where taxes are going to be, and then say, oh, we should have done this, coulda, shoulda, woulda, invested in a Roth IRA versus the traditional 401k, or the traditional 401k versus the Roth IRA or Roth 401k. Your hindsight's always going to be 20/20. So we're really just giving it our best guess. But generally, you want to smooth out your taxes. So what do I mean by that? Look at your credits and your deductions. You want to figure out where generally you're going to fall as far as your income is going to go, and how much taxes you're going to pay, and whether or not you'll qualify for any credits or deductions. Because if you could qualify for a credit or deduction, but you can't right now, maybe putting some money into your pre-tax account will lower your adjusted gross income, so then you could qualify for those credits or deductions, whatever they might be. That's kind of how you should be looking at it. And then as we smooth this out, we don't want to just load up on the Roth IRA blindly because we're getting all this tax-free growth. If we're only doing that and we're in a higher tax bracket today, maybe on down the road, and we're maybe foregoing some credits. Think like child tax credit, right? So I have 4 kids right now, and if I don't try to get those credits today, if I could possibly get my income low enough to qualify, well, they're not going to be in the house 25 years from now. At least I hope not. Hopefully they're on their own, but I can't even claim them as a child anymore because they're going to be too old. So they're out of the house and I would not qualify for that. So it's not just about the tax bracket. It's also about the credits and the deductions. So yes, you want to smooth it out. Now, even if you hear people screaming saying taxes are at all-time highs and they're going to go up in the future, you're going to end up paying more, they don't know for certain. They can think how it's going to be, but at some point in our country, we had, I think it was high as 90% was the highest tax bracket. Now, virtually nobody paid that, but you get the point. Taxes go up and go down, so we don't always know where we're going to land, but on an annual basis, if you're trying to figure out where I should put my money, whether I should put it into this retirement plan or that retirement plan, credits and deductions is where you should start and basically where you should end with it when you're trying to figure out how to balance that out. Now, yes, you can use some guesstimates, if you will. Are you in a job that is going to have a steady income, one that's going to go up significantly, whatever, right? So you have to kind of take that into consideration when you're trying to balance the two. And the last point that I really want to make in this video is that it's important to save. Even if you make a mistake and you're thinking, I should have put more money in my pre-tax versus my post-tax or vice versa, the number one thing that you need to focus on is the ability to save, making sure that you have enough money. Getting a little bit more because you chose a different investment or you chose a different type of account is great if you can choose correctly. However, the biggest impact that you can make on your financial life is the amount that you can save. Because if your money is not saved, if it's not invested, it's not working for you. So that is the number one thing that you should be focusing on. So if you're in that position and you're like, I'm going to start saving right now, I'm just really confused, start to save. See if you can tweak it as much as possible. Continue to educate yourself. So hopefully this video has helped. Let me know if you have questions on this. I'll do more videos on this. And if we need to draw it out, I will on future videos. I just wanted to give a quick, hopefully this is a quick explanation. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.